Hello and welcome to the IPEM Wealth 2025 edition here in Cannes as we explore the latest trends in the private asset industry. What's the mood right now and what can we expect in coming months? Our next guest is Anne-Laurence ROUCHER. Hello and welcome, Anne-Laurence.
Nice to meet you.
You're the Deputy CEO of MIROVA, also Head of Private Equity and Natural Capital. MIROVA, which is an affiliate of Natixis Investment Managers. Thank you very much for being with us. Before we get into the details of your investment strategy, a quick word on MIROVA. What does it represent today?
So MIROVA is an asset management firm fully dedicated to sustainable and impact investing. We manage 32 billion of euros. We are a 12-year-old company. And within those 32 billions, we manage 27 billion in liquid assets, so as listed equities, fixed income, and 5 billion in private assets. And in private assets, we are active across three asset classes, which are energy transition infrastructure, natural capital, and private equity.
Okay, that said, how do you invest in private assets at MIROVA? What's your approach?
So our approach is that private assets are a really good fit for sustainable and impact investing. And we have taken the view that we should be experts in the asset class in which we invest. As you can see, we have a pretty strong environmental bias because we invest in energy transition infrastructure, which encompasses renewable energy, storage, and clean mobility. We invest in natural capital, which is about agroecological infrastructure. So basically regenerating, protecting and restoring nature, which means restoring forests that generate carbon credits on the that are bought by corporates on the voluntary markets, or promote sustainable agroforestry practices, regenerative agriculture practices that enable to produce sustainable and certified food and timber that is bought by the large corporates of this world. Okay. That's natural capital. The last one is private equity, where we have a first investment strategy that is to invest in environmental solutions to the environmental transition. And a second one that is a tech for good strategy, so meaning to invest in the solution around humans to promote a just and human transition.
What's the current mood on the market segments you're addressing and what do you expect in 2025?
So the mood is cautiously optimistic. So giving you some perspective on the private equity. So last year, limited number of deals because bidders and offers were not matching in terms of prices. The recent slowdown in terms of interest rate has helped a little bit, and therefore we've seen a bit more transactions and prices going a bit upper, so which is pretty good. More precisely, what we believe is that when your theme is a good one, when your investment approach is robust and your theme is here to stay, this is not because you have liquidity issues that you don't make deals. To put it in other words, planetary boundaries have been crossed, and it's not because there is some political turmoil, uncertainty, that it will stop. So the solutions to how we manage the overcoming of the planetary boundaries are still very relevant.
This is long term.
And this is long term. So that's why it makes sense. And a good example is that the clean tech deals have been in 24 larger in numbers and in value than in 2023, which is, I think, a pretty good mark that actually when your theme is robust, whatever the market uncertainties, it works. Touching now on natural capital, what we see is that corporates are very much cognizant of climate change. They have been pretty active on reducing their carbon footprint across their value chain, and they pay a lot of attention to the last mile, which can be done through outside their value chain, carbon sequestration with voluntary carbon credits that are just generated when you protect or restore forests. And on another note, food security, supply chain resilience in the food business, we see this more and more, like heat waves, drought waves, waves where actually the food supply is at risk, and it's in conjunction with eroded lands. So the yields are decreasing, and we know that regenerating the soils, moving to more sustainable agriculture and agroforestry practices is actually key to restore yields and make sure that we have enough food. And so in this conundrum, natural capital investment strategies become better and better understood.
Would you say sustainable investing is being challenged right now?
It is actually on listed markets, mostly. So it is for many reasons that we all know. A lot are related to political reasons, be it in the US, but also in Europe. It's also because the macroeconomic context is more difficult, and it requires investments to make a sustainable the sustainable transitions we need to do. So that's for sure. On listed markets, their key feature is to overreact, and the valuation of the markets is not an intrinsic one. It's done by the market. So if investors can change their mind every other day, and they're still right. So that's the listed markets. On illiquid markets, we invest for the long term with patient capital. So we have fundamental valuations that don't change from one quarter to the other or from 1 year to the other. So therefore, it's much more stable. And that's why we are still much more aligned with the long-term trends that happen.
So today you're speaking at a panel session here at the IPM Wealth in Cannes about thematic funds. Are these funds next big thing in wealth channels? What's your take on this?
You know that thematic funds on the listed markets, typically on listed equity markets, are valued because the value proposition is very clear. It's about the same for private assets. It's a clear value proposition, and more investors want to do good with their money. And ideally, they want to combine financial returns, robust financial returns, and a positive impact with regards to environmental and social issues. So investing thematically enables to do that. That's basically our investment thesis and value proposition at MIROVA. And therefore, it's a pretty powerful message because there is no trade-off to do in that kind of investment strategy. Basically, if the technology or the solution that is proposed by the project proponents in which we invest is robust technologically and that the market from a sales perspective is there, then the more business the project proponent makes, the more money, the more financial returns, and the more impact. That's why they are truly correlated, and it's a virtuous circle. And that's why we believe our investment thesis is here to stay.
Okay.
And that thematic fund basically makes sense in this perspective.
Okay. More generally, what have you learned so far about the wealth sector?
Well,
because this is the IPM Wealth.
Exactly.
The first one.
Yeah. So the wealth sector, what's interesting is that the wealth sector in the private assets is 5% of private assets total AUM in the world. The inflows from wealthy investors represented for the first half of last year in France 20% of the inflows. So the inflows are 4 times larger than the AUM. So this trend is here to stay, we believe, because it's a great diversification tool for the individual investors.
And finally, what would you like to tell to wealth professionals and their clients? What are your key messages here?
So basically, they should continue because private markets represent 80%, more than 80% of the global economy and more than 50% of the jobs. So being exposed to those private markets is clearly additional to listed markets. The tools to invest in those private markets have been improved. Lower ticket size, capacity to invest through online platforms, favorable regulations such as LTIF2 or Green Industry Law in France. So we believe that the tools are here and the fundamentals are here as well to justify a much larger allocation from individual investors to private assets.
Okay, Anne-Laurence ROUCHER, thank you very much for your time. You're the Deputy CEO of MIROVA, which is an affiliate of Natixis Investment Managers. Thank you, bye-bye.